In this video, we take a look at the close process. We've looked at various risk assessment tools. Last week, we looked at preliminary analytics. And in this video, we're taking a look at the close process. Now, the close process, there's really no tool that we're using here like we did with preliminary analytics to do risk assessment. We're just looking at how the business does the closing of their books. So what is the close process? This is that final phase that the business goes through to create the financial statements. So you could have a business that has perfect records the whole year, but in the close process, there could be a mistake that is material, or there could be fraud, and the business is intentionally altering those final numbers. So the close process is very important, and that's why we need to take a look at understanding how that works. Now, one of the interesting parts of the close process, for many small businesses, you're creating the financial statements, are you not? If you're working for a really large firm, say a Big Four firm, that's not true. Your client is creating the financial statement. But for many of you in small to medium-sized CPA firms, you're creating the financial statements. Regardless of who creates the statements, you need to fully understand who creates the statements. Is there a disclosure checklist used? How is information brought together, say like in a consolidation? Who approves those financial statements? Who assumes responsibility for them? And so you want to know all these different things about that final bringing together of the information in the creation of the financial statement. So let's take a look at the close process. Here we are in Chapter 11, the close process, and this will be a short video. Actually doing this part of risk assessment is one piece that normally doesn't take a substantial amount of time, thank goodness, because other areas such as understanding internal controls can take a lot of time. But here we're just getting with the client and we're making sure that we understand how the financial statements are put together. Now, as we meet with the client, we're asking questions such as these. How are the statements created? Who creates the financial statements? Is a disclosure checklist used? Who reviews the financial statements after they're prepared? You might also ask, who creates the journal entries when the financial statements are put together. So in some companies, you might have 5 or 6 subsidiaries that are brought into the consolidation, and there's some journal entries that are made. So you want to look at how that occurs as well. Obviously, the more complicated it is, the more time you're going to spend here. But for most businesses, they've got a trial balance, they're done, and then they're handing off the trial balance to the auditor. The auditor's creating the financial statements. Now, when you create the financial statements, you have a self-review threat from an independence perspective. And you want to make sure you document in your audit file that this does not impair your independence. If it does impair your independence, then you can't do the audit. So you want to make sure the client has sufficient skill, knowledge, and experience, what we call SKI, to review the financial statements that you create and then assume responsibility for those. If they don't assume responsibility, again, we're not independent and we can't do the audit. When you prepare the financial statements, understanding the close process is much simpler because you're doing it. You know everything that's going on in the creation of the statements. When the client creates financial statements, it can take a little bit more time to document who is doing what. But either way, you need to document how the financial statements are created. Now, once you get done, then if you identify any risk and material misstatements in this process, you're going to bring those onto your risk assessment summary form. An example here might be, let's say you're auditing an entity that has 6 subsidiary entities that are being consolidated. And as you interview about the process of bringing those together, you see that you've got a junior level staff person that's doing this function, and you're not real sure that they know what they're doing, and there's not sufficient review of that consolidation. Well, that could be a risk and material misstatement, and you would note that on your risk assessment summary form. That way, you could plan audit steps to review you'd review the actual consolidation. You might want to reperform that to make sure that it was done correctly. I said it would be a short video, so I'm done with this piece today, the close process. In summary, you just want to know who's doing what in terms of creating the financials, and then if there are any risks, if you see anything that's not working the way that it should be, you want to identify those and bring them into the risk assessment form. Next week, we're taking a look at one of the more interesting parts of auditing, and that's how information technology affects your audits. I see a lot of confusion about this area, so stay with us and you'll learn how to deal with that in the next video. Take care and bye now.